Hi, I'm Joseph Falbo, Certified Financial Planner. Today we're going to talk about the recession eventually. Since early last year, economists, market experts, and even some of the CEOs out there were predicting a recession for this year, right? Most of them said it would happen early in the year. A recession was the consensus view basically among most financial experts, and they were looking at it as almost a foregone conclusion. Now, you had inflation surging at 9% last summer, and the Fed was aggressively raising interest rates, so that was an easy story to sell and to believe. Fast forward to now, the present. Same experts that said we were going to have a recession, or we'd already be in a recession, are now pushing their recessions out to the end of the year or even into 2024 because recessions are normal functions of capital markets, right? They do happen eventually, and eventually these experts, eventually they know we're going to get one, and eventually they will be right. So as long as the forecasters keep pushing out the date, they won't be wrong, they'll just be early, and that really is the crux of financial forecasts, right? You have to be correct not only in the prediction, but you have to be correct in the timing of it. Now, recessions are not equal, right? They come in all different sizes and durations, right? Some are longer, some are shorter, some are long and deep. You think of the global financial crisis, and some are brief and shallow, right? Others are like COVID-19 recession, were deep but very brief. In fact, most people didn't even realize we were in an official recession during COVID because it was the shortest recession in history, and it came back very swiftly. Now, many investors associate recessions with markets being down. Now, of course, yes, that has happened in the past, and that can happen, but markets have also gone up during recessions. Most people don't realize that. So even if someone could predict accurately a recession, that doesn't actually mean we know exactly how the markets will react or perform to the recession. And this is all predicted, and I think the greater risk, while many people focus on a recession occurring, I think the greater risk is how investors respond to these forecasts and expectations of a recession. You know, after all, recessions don't cause you to miss your financial targets, especially when you have a plan. It's investors' reactions and investment decisions that influence their financial success or failure. Peter Lynch has said it best: far more money has been lost by investors preparing for corrections or trying to anticipate corrections than actually in the corrections themselves. I hope this message helps you.